Well, welcome to the video. In this video, we will do a broader market analysis. This is something that I do once a month at least, maybe every 2 weeks. I do have it set in my calendar right around the 3rd of the month, so I'm doing it a little bit early. But someone in the Discord group asked for my view on DXY and a few other things. This is something I don't do a lot of videos on, or I don't share, just because my group is really, I'd say, a intraday group, a trading group. And this macro micro analysis of the markets, I don't know how much my group really cares about this type of stuff. So I don't do a lot of this stuff. I don't do a lot of these videos. So I'm just going to dive in. I'm going to go, you can see down here on the right, this is my kind of main macro micro look at the markets. I already have these charts already marked up. This is something that I do on an ongoing basis. We'll be looking at the overall cycles as well as kind of just, I use this to just inform. I trade futures, I trade crypto, I trade FX, I trade equities on a swing basis. So I really use a lot of this analysis just to kind of make sure that I'm in tune with the overall larger view of what the market is doing. So let's jump in. The first thing we're going to cover here is the DXY, the dollar index. Now we're looking at the monthly time frame, and the month did close over this inflection area from January 17. So that's probably a big thing. That's probably something that obviously the market watchers in the FX market, the regime watchers are actually viewing. Most of the analysis that you see here, and I'll just share this, the 4-day is that golden time frame. I mean, of course you have the week, you have the month, you have the day, but if you really want a good happy medium between the week and the daily, that 4-day is that golden time frame. So a lot of this analysis and the levels are based on the 4-day, which really coincides or correlates with really good weekly levels as well. So the first thing on the DXY, what I'm looking at here, if we go back to the daily time frame, it's real simple. I do see that these levels here, if we actually go to the actual 4-day here, and I don't know why that's not locked, that should be locked. If we go to the 4-day here, we can see that right here we have the July to October 2022 failure, or 2002 failure. I'm way off by 20 years. The failure here, that's the first target on the upside. The ultimate target that I'm looking at is the December to January time. Everything is being compared in this current market cycle to the .com era. And to me, this is something that when you look at narratives and you look at narratives of what are they projecting, to me that is laying the groundwork for actually getting back to these levels. So when you look at the larger view of the DXY, I think we're going up here. I really do. I think we're going to go up, and I think it wants to go up and test these December 00 and January 02 levels. I think that's where it eventually wants to get to. So if we look at this super cycle, that's really what I think we're looking for. For the immediate term, what am I trading on the DXY as far as the dollar pairs? What am I looking at? Well, this area here, down by obviously just below the 100 level. So if it gives up the 100 level, I don't think that's the end of the world, because what we have here on the daily, on the 4-day time frame, is we have the RDA, we have the momentum indicator, and we have the other momentum indicator. Now if we go back to the daily chart, you can see this whole area here. I wouldn't be surprised if it does come back and test this area back here, back in the 98, 100, before it wants to go take off to this, at least this first upside level here around the 108. That aligns with the RDA, that aligns with our momentum indicator, and it is an overshoot. So everything is aligning as far as the trade system that I trade, that's highly reliable, that works very well. Everything is aligning for a recheck of this area. And for the momentum long, I mean, really it's been bias long on the daily time frame since January 2022. It's been bias long. So the DXY has been bias long. It rechecked this level here. So that's what I'm looking for. It's really this area down here between the 99 to the 98 level. I would like to see a retest there before it goes up here, but I'm also open to the fact that it might hold the momentum here. It might hold this momentum right here. So it might come back and check the momentum right around 102 and take off from there. So that's another scenario that I'm open to as well. which is this scenario here where it comes back and just checks the momentum, or it checks this lower momentum right here, right around 100,953. And then from there it goes to the next level, the next key level, which is really this July to October 2002 4-day failure area. And if we go back in the chart, you can see way back in the chart, we go to the 4-day, you can see back in the chart, that's that inflection area I'm talking about. And then we have this inflection area. I don't even really want to think about what would have to happen for these levels here back in 84 to be tested, 85. So for these levels back in 85 to be tested, something drastic would really have to be happening for these 84 levels, 85 levels to be tested. So that's something I wouldn't want to really think about. But if we get there, start holding these levels, we'll start looking at that. Let's move on. And like, I'm just not going to explain any of this stuff. If you're watching this video, I assume you just want to kind of know my higher level view of the markets. The next thing we'll move on to is we'll move on to a unique chart here that most people probably don't have. And what this is that on TradingView or on many platforms, you can track whether or not, well, let me pause the video and show you exactly. So on TradingView, for instance, you can go here and you can go to S5TW, and you can see there's various other ones here. You have the S&P above 50-day average, S&P above the 200-day average. So TW is S&P stocks above the 20-day average, and it gives you kind of it gives you an index view. Now what I do is I combine the four that are available on TradingView into their own ticker. And what this is basically the S&P 500 above 200 down to the 20-day average, I believe is what the latest is. And if you want to know what this ticker is, this is what it looks like. So that's what that ticker looks like. It's just plus, 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 plus. So it's index. So you can see that. So I use this because what it really does is it's a great reversion strategy. And what I mean by that is, well, I shouldn't have to explain it, but this here is the March 21 high. This here is the March 20 low. You can see here when the index, which got really the lowest it's ever been at this kind of 9.28, 8.42 level down here, over here, when it got there, it really bounced. And that was the March 20 low. So really that's what's on target for anybody in the market. They're watching, we're in this volatility box, and we're going to probably be in this volatility box for a while. And the volatility box is the March 20 low, which the market's, the structure and the plumbing of the market changed in March 20. People don't realize it yet. They're going to wake up here as the next 12 to 18 months transpire. Everything changed on March 2020. And then we have the March 21 high. We're going to be between a volatility box between here and here for a while. Obviously, the downside is this March 20 low. The upside is the March 21 high. That's kind of where we're at. So I use this chart really just, and you can look at it on a daily basis as well. And you can really get a feel. And what I mean by it's a reversion strategy is obviously, if things are down here, you're looking for the reversion to the upside. If things are up here, especially above these key levels like you see here, when it gets above this key level, then I look for sell-off in the market. I look for are we extended from our momentum indicators? Are we extended from our bias indicators? And look for sell-off in the market. You can see these levels hold up pretty well, especially on this combined. Now I do the same thing in the NASDAQ as well. Same type of thing. You're getting the same type of view. So we can see here at least what this is signaling, what this chart is signaling is that we've got more downside. What's the ultimate target? Well, everybody knows that we're watching those March 20 lows. So it's really every decision on a larger time frame should be guided through, well, you've got your immediate highs here right around March 16th. So you'd look at those levels on the chart. But everything is guided between this March 21 high and this March 20 low. So really that's what the market's looking for. The market's looking to see, are these going to be tested, or are these going to hold up, or are these going to break? That's really what the market's looking at. Another unique view that you can get of the market is this combined ticker. And this is something that if we go on the daily time frame, actually the 4-day works better, apologize. The 4-day works better. What you can see here, what this is this is the up volume versus the down volume versus the advancing and the declining, okay? Now, how you're reading this chart and how this is useful is it helps you kind of get into the mindset of where volatility is at. The standard deviation is the channel that you see here. This is kind of what I would, and it's not mathematical, so I haven't mathematically said this is the standard deviation. I'm just looking at the chart. I've just drawn on the chart. I've had this on the chart. This is the standard deviation channel that it trades within. So when it trades, when this combined ticker is outside of this channel, and you can see here, this is September 16. When we get into the March area, we're starting to see an increased volatility. You can just see the increase in volatility. You can see it increasing over time. So as we're kind of going into this market cycle or coming out of this market cycle, whatever we're doing, you're really looking at this and you're looking at, okay, where are we at within the standard deviation right now? With the sell-off, we're trading below the standard deviation. As this shared ticker gets down to this level here, we'll be looking for clues that potentially the bottom is in, or a short-term bottom is in, the same way that as it approached these upper levels, you were looking for a potential sell-off. So this is when it's within the standard deviation, when it's trading within this range here, what you're typically looking at is you're saying, okay, well, it's going to be a lot of range days. There's probably going to be a lot of the levels on the upside or the downside will hold up. This is how I use this to just kind of gauge. Once again, it goes into my data box, into my brain, and then I trade the markets on a daily basis. All right, so let's move on. So that's interesting look. We can see that the volatility is still remaining the same. We are at the lower end. So as it gets down here, we need to be open to that the bottom is in and maybe not be heavy short. So it's something to be mindful of. If we go to the next, we look at the TLT. TLT, as far as a super cycle is concerned, we're approaching the 75% mark right around 109.96. So that's the area I would target if I was short TLT down here. And then I would be looking for a bounce right around that area. It's pretty obvious with the chart. If you look at it on the 4-day, it's kind of below that low level there. That's what I'd be looking on the TLT. We look at the actual 30-year. The 30-year is in an interesting channel where it's at a very interesting place in the chart. We go here and we look at the 30-year. For the longest time, it's been in this downward diagonal channel that was very easy to plot. We've got the horizontal channel, the super cycle, that really is starting from December 99. So this is the 99 cycle. And that's really what if you look at the financial regime as far as bond yields, a lot of it is from the 99 cycle. So the 99 cycle, that high, is kind of the narrative that it's going after. So what you're looking for on this is the same type of thing. It's very obvious. I mean, this is what makes the Rexdog system so powerful, is that it works on everything. And you look at here, the 4-day is aligning right here with the momentum in the RDA. So if there is a pullback and it comes back here, you want to see that hold up. And then the first super cycle is obvious. I mean, you've got your obvious levels on the 4-day. This level right here, the 50%, is our first target. That holds up. Momentum holds up. That's your first target right around this 3.6 level. That holds up. Momentum continues to hold up. Why is that not locked? Okay, sorry. This should be locked and it should be named. I don't know why it's not named. Okay, so that if that holds up, then it's the next level, and then it's taking out the 99 cycle, right around 6.5. I'm talking about long term, right around 6.5, taking out the 99 cycle, and then from there, it's really understanding what happens from there. I don't put a timeline on this. I'm just telling you what the chart's telling me. As long as it remains bias long and momentum long, that's where it's going. That's the next upside levels. All right, so let's go to the next ticker. Let's go to, we don't really need to do the 10-year. We just did that. If we look at, let's not look at that, high yield. So technically a risk-on asset. I hate to use that phrase. If we look at the 10-year, or not the 10-year, high yield corporate bond. Obviously, if this is up, you would expect a quote-unquote risk-on environment. Really, the channel you should be looking at this is the December 08 super cycle. So that's the overall cycle that is driving high yield debt. You can see that's earmarked here. Our sub-cycle that we're looking at is the March 21 high and the March 20 low. That's our sub-cycle. So really anything driving that, you can see here right now, a high yield is actually momentum short, bias short. We've got our various momentum checks up here. So if for whatever reason it bounces off the 50 here, because I don't know, maybe positive news over the next coming weeks, I would expect failures at either the momentum indicators here or the actual RDA here, right around the 75% mark. So that would be a good move. A good move would be down, go down. A good move would go down here, come down here, and then potentially come back, retest the 75%, the RDA, and then continue to fail down to take out either these lows or to go down here and test the overall super cycle. So I think that's the narrative on a lot of these charts, is that you've got this sub-cycle between the 20 and the 21 high, March, both Marches, and then you've got these super cycles. And we don't know yet which super cycle is going to take control. And that's all watching the momentum indicators. All that is just watching what happens on the RDA and the momentum indicators, and how do they switch, and then do they maintain. You've got the lower super cycle and the upper super cycle here, which is really kind of the longer term targets that we're looking at. If we look at the Russell, because I haven't looked at the indexes, let's look at the SPX. SPX, we can see here, we've got the 2008 super cycle here. And that 2008 super cycle, if we go here and we take off the March cycle just so that we can see the super cycle. Our super cycle is giving us some key levels. We've got the 50 here, we've got the 75, we got the 25, and then we got the bottom here. This is obviously the March cycle here. So the immediate concern, what everybody's really wondering, is do we retest these March lows, and then do they hold? That's a long way down. So this is what is driving much of the narrative now, which is, are we going to go down another 50% and test that? And are those going to hold? Or are we going to hold somewhere in between? That's really what's kind of the narrative that's driving the market right now. We're looking at the 4-day time frame. Once again, we can look at the weekly. You get the same view. Monthly, you get the same view. If we look at the overall super cycle, as far as from this level here, December 08, the low, and then obviously the highs, it's really what would be the best case scenario on the long side is this level holding, the 50 of the super cycle holding. Obviously the immediate best side, because we're looking at the monthly time frame, is the RDA holding. You can see it held in March. So the RDA held in March 20. So the RDA holding on the monthly time frame in this level is a scenario you should be highly open to. Just because it's held up so far, and there's been no proof that the market wants to turn on the monthly level. If the market gives up the RDA on the monthly level and then starts using the RDA and the momentum indicators, then the downside's going to look pretty ugly. So it's really this level here between 3,600 and 3,400, which is whether or not that monthly super cycle level, I'd maybe reduce it a little bit. Let's reduce it down. And this will change obviously as the monthly unfolds. So it's that level right here that is really important for if this overall super cycle maintains a long bias. That's really what's important. Now we are approaching a very important momentum indicator right here, right around 4,000, right around the 4,000 level. So this coming week, I anticipate we'll test that level if there is a downside move. That is going to be an important momentum level that's held. I mean, that has not been, it never has been tested since May 20 when it recaptured it. It's given up the short-term momentum. It's now testing the longer-term momentum indicator. This is an important level. So between here and here, this next week, I would anticipate between 4032 and this level here, 31, or yeah, whatever that is. Let's zoom in. 3,800 or so, 3791. Between those levels there, it's probably an important level that you would want to watch, and maybe even fade to the long side, because that's it's the first test on the monthly level, on the monthly time frame of the important momentum indicators. So that's something to watch. If we look at the daily, so that's kind of what I would watch on the S&P. We go back to the NQ. I don't really need to go to the NDX. It's the same type of thing. It's the same pattern. Everything I just did on the S&P, you can do on the NDX. Since I trade the NDX every day, I don't really need to dive into it. We look at oil. Oil's in this other interesting area. I think it wants to do the same type of thing. I think what oil wants to do, based on my analysis, is it probably wants to take out the 2008 super cycle. And that super cycle includes the March low. So this super cycle really is the March low, because that's really the low that we would be tracking. To me, everything on this chart looks like it wants to test out that 2008 super cycle. If we go to the 4-day time frame and we look back at the chart, you can just see that's a very clear area right around 145. I know a lot of people are calling for $200 oil. It's got to capture that. It's in this volatility range here. So, but to me, on the 4-day time frame, as long as the 4-day time frame stays within this diagonal channel you see here and holds the momentum indicators, it's held the RDA since really here back in November 20. It's held the RDA on the 4-day time frame. A little bit below here on November 21, but so far it's held. What haven't I covered that we should cover? Well, we have China here. There's nothing really to note of there other than just watching the levels and the full cycle. So I'll pause and make sure I've covered everything. All right, the last thing I'll cover here in this video is gold. So this is really simple. This is why I use 4-day charts. I shared this before. 4-day charts give you very clean levels. 4-day charts are anything that a week one technical analysis trader, meaning someone who's just learning trading, I'll give a month one. A month one trader can clearly see levels on a 4-day and clearly trade against those levels. When I say trade against those levels, it's very simple. What's the most important downside level on this chart on the 4-day? The immediate, not immediate, is here. Is 1674. Around that area is the most important downside level on the 4-day. What's the most important upside level? Well, obviously, this August 20th upside level right around 2047. That also is, the 2008 cycle, that's really the low. So the low that you see here on the chart, this low is the 2008 cycle. So really, when you're looking at analysis on a longer term time frames, you got to go with the pivot points of what the market's told you. You got 01, you've got 2008, You've got another kind of time frame in between there, but for me, 2008 is the last pivot cycle, the last financial regime. When you look at the decisions that the Fed and various capital actors have made, a lot of the decisions are based on the concept or based on what's happening since 2008. So that's really what's driving a lot of the narrative. The narrative on the upside is what happened based on either the March 21 highs or the March 20 highs. Those are the three narratives that you really are just looking for these larger super cycles. That's what we're looking at. So if you're making larger, long-term, I'm talking about multi-year decisions, that's really driving your narrative. That's really what you're looking at. Gold is telling us right now that it wants to try to stay in these higher upper ranges. Obviously, we've got this level here. So if it does get around what you want to see, if it does sell off for whatever reason, you've got this first area here that you're going to be looking for that it's testing right now. But then you also have down here. So this is, if it does get down here, that's a good buying opportunity, possibly, for then gold to maintain creating a new super cycle high. And maybe that super cycle high was right around the 2800 level, right around this level here. I mean, you can look at this here. We can look at the last super cycle, and you can just say, well, what happened to the last super cycle? I mean, 2008 to then all the way up here to July 2011. That was a 167% increase. So let's just use that as a measured move. And let's say that it wants to do the same thing. So what do you measure? What's the current inflection point? Well, the current inflection point is that November 20th area. So if we go back here, we go to June, or March, I'm sorry, March 20th. So we'll use this as the inflection area, and we'll just go up 167%. I mean, this is simple, obviously, real simple. We'll go up 167%. I would cut it in half, but let's just say we do. Let's just say it goes into some kind of super cycle. Same type of super cycle. We can keep going. Obviously, as the numbers get bigger, the differences and changes. So if you're using that as a measured move, you're right around this 4,600 level, okay? Let's cut that in half though. Let's just cut that in half and say the cycle's not going to be as large. So you take that high, you take this low, you say right around the 3,000 mark. So that could be potentially, if you're looking for a larger super cycle, things really go haywire and gold really does take off. You know, you kind of can look at this as, okay, that's the last measured move. We can then use that, gauge that as potentially something that the market might use. And then you've got the first really round 3,000 number, which is a great number. And you've got a high right around 4,600 or so. If you look at that time frame, what did that take last time that happened? What was the actual time frame that took? We take from here to here. That took roughly 1,049 days. So we could do the same type of thing. That's the same type of move. I mean, that would be a huge move in that time to do that. Definitely. So if we take that, that would put us right around March 2025. For if we did, I mean, if it did this type of move, something's really off in the world. If it did this type of move in that time frame, something's really off in the world. We're probably going through a lot of pain. Even this move is a lot of pain. So that's something to consider. So, like I said, I didn't really have much of a plan other than just, if you're watching this video, you were interested in it, you'll find links down below to my various channels, Discord, Telegram, and various other things. I look forward to seeing you in the next video.